guys, welcome back to Bay Area Home Hustle Podcast. My name is Parm Rahi, and Mike is behind the camera today. And we have a special guest, Terry Luke.
Hi. Hi.
So, thank you for coming.
Oh, sure. It's my pleasure.
So, today's a special topic, and especially when it comes to our sellers. When they're selling a property, sometimes they want to defer taxes, not pay money on them, right?
Oh, yeah. Taxes, very big thing. Yeah.
Right. So, there's a tax advantage, which is a IRS code 1031.
Yes.
And today we're going to get into that. So, let's get into it.
Okay. Well, I mean, just kind of course, like the tax code is pretty complicated, but I just put it in very simple terms is that like, the benefit, like, especially like rental property owners, they're looking for is that when they sell a property, they may have a lot of embedded capital gain and they say, I don't want to pay tax now. And I want to use this money to buy another property or do further investments in real estate properties. Then 1031 exchange offer the benefit of like you sell the property and then you defer the gain without paying tax at the time you sell it.
Okay.
Right.
So deferring, so basically, deferring your capital gains and not paying taxes.
Exactly.
Right. So what is the time frame? Do we know what the time frame is like? I mean, I kind of know what it is, but I was
sure.
You can share that.
Yeah. So basically, the time, there are two numbers. It's 45 and 180.
Right.
Okay. What a 45 days means is that after you sell, after you close your property, after you're selling, then within 45 days, you have to identify another
Which
investment
is called the
property.
discovery period.
Exactly. Discovery period. And within the 180 days from the time that you the closing of the property, you have to close those property.
Right.
Now you can choose up to 3 properties in that process.
Okay.
And this is one of the strategy that a lot of time I help my client is that because they say, well, I want to, kind of like get some, I call that meat from the gains, right? And so because like, when you sell a property, let's say you have $1 million capital gain, very common in the Bay Area, right?
Yeah, absolutely.
They say, wow, gee, I would have to pay a lot of tax, right? But you use this strategy to kind of like chop it up, the property into 3 properties.
Okay.
And then later you can like sell one by one, especially when the time you retire, your tax bracket will go down.
Okay.
And potentially you could save a lot of tax.
So what you're saying is, so if you have $1 million coming out of your subject property, essentially, you're able to buy 3 properties.
Oh, yes, you can.
Funds.
Yeah, exactly.
So it's not a 1-to-1 ratio at all.
No. As long as like you don't take money out from the sale, from the proceeds, and use those proceeds to further invest in properties, you can, cheer up.
So let me ask a follow-up question to that. Is that if I was in that situation today, right? Do I have to spend the entire $1 million, or can I? You do have to spend the entire amount, right? It has to be more above and beyond, right? It can be lower. You can't take the money and
Sorry,
you can't take the money and invest in other things.
Well, you can do what they call a partial 1031 exchange, and a lot of times I would sometimes recommend client to do it, not to kind of like tax defer all your gains, okay? Because sometimes when a person in a particular year or they retire, their tax bracket may kind of like drop, and you can, let's say I'm just throwing a number, $1 million of gain. You can say, well, maybe I can pick out 100,000 of it, potentially, or 50,000, whatever, because like when they retire, they have a lower tax bracket, and some of the capital gain may not need to pay tax on it. I don't want to go into details on that, but potentially you have that kind of like, I call that a tax strategy. Not 100% defer, but hey, part of it defer. You can also do that.
Okay. So after so let's say this. So we got the 45-day discovery period, and we have the 180-day consummation period, essentially. What if I don't identify the property within that time frame?
Well, too bad, man. You have to
the entire amount.
Well, say you got 2 property closed, 1 property didn't close, and you don't use up all the gains. That remainder gains, whatever, will be taxed.
And then is there a penalty to that?
No, there's no penalty.
So what I'm saying is that I initiated a 6 months to have this 1031 exchange, and at the end of it, I didn't do anything.
You just pay the tax.
So you just pay the tax.
Exactly.
Oh wow.
Yeah.
What else? Are there any myths to this 1031 exchange that you know of? People believe all kinds of stuff. I'm just trying to share with our viewers, like, Is there anything else that people believe that debunked today?
Well, I've come across a case that actually, especially, those who are not familiar with the U.S. tax situation, that they thought they sell, they don't pay tax. And, a lot of times, because well, first of all, one big myth that I always encounter is that, oh, can I use my home to do 1031
primary
exchange?
home?
No,
you cannot.
No.
Right.
Basically, 1031 exchange is actually, the scope is pretty big. Okay. It's not just rental property. In general, it's like business property or property that is used in production of gains. Okay. So such as business and investment. So basically, real estate is fall under the passive kind of like, investment and stuff. So it's an investment category.
Right.
Yeah, so that is the biggest myth that a lot of people thought that, oh, gee, I can just use my home to do it. No.
Right, no. Primary, I remember that. Primary doesn't work.
Yeah, and actually there's a little bit more details that, like, there's a provision called a personal use within 14 days and stuff like that. But I don't want to get into details.
That's too detailed.
But very simple. If it is like personal use property, no, you cannot do 1031 exchange. Yeah.
So are there any other benefits to 1031 exchange aside from deferring taxes? I mean, you have to find a like property or
yeah, you have to find a like property. Of course, like the purpose of behind, like let's say you have a rental property providing you with very good gain, way.
Yeah.
But you said, well, you see that, like, a lot of times certain investment got to a certain growth plateau. You say, well, if I keep on holding for 10 years, for example, the appreciation is not there, even though it get me like passive income, right? You want to find some other area that has better growth. My example is like, I help client to sell the property in San Francisco Bay Area and move to Seattle.
Right.
Okay. And because like during that time, Seattle has a better growth in terms of percentage. Okay. Than the Bay Area, because like, there are a lot of high-tech company over there that's, start to boom at that time. Okay. And real estate price in Seattle, relatively speaking, at that time, it was still lower.
And this is where relatively the whole example of taking property or taking money from California and reinvesting into multiple units.
Yes. And within US, you can go anywhere. You can go anywhere. So that is one of the advantage. And some of my clients are thinking about living in California. To go to places that don't have income tax, such as Washington, Texas,
100%.
right? So they want to, hey, I'm still living in the Bay Area, but in the future, I want to, plan ahead to move over there. And 1031 exchange also offer that tax deferral benefit that they can plan, and then later they convert their rental property into their own home and also take advantage of another tax benefit. So there are a lot of tax involvement, in this process, that a lot of times that people, when they know about, some idea, they say, they didn't discover that before.
And so one of the other questions I'm sure cut up, and some of these viewers are asking, like, so how do you set it up? And from my understanding is that when you're selling a property, you simply get your escrow company to do the same, They can in-house provide this service as well too. Am I incorrect in assuming that? Or
well, my experience is that because like this 1031 exchange is a very complicated process and it's also involve a lot of tax issue. I would usually, my experience is that, you start with your agent, and that agent will he's kind of like a primary doctor to refer you to specialists. And usually agent will have like affiliation, association with professionals. Okay. You work as a whole team. The main point is that you do need to have a team of people working for you. If you go out to find an agent and find,
which they do.
It's very dangerous from my experience. Okay?
Absolutely.
Yeah. And also involve tax person.
Okay? So rely on your agent, essentially what he's saying.
Yes. A trustable
your
professional.
Agent will have a professional, whether that's an intermediary, like a third-party person, or even your escrow company, they'll provide that service as well too.
Exactly.
What other thoughts you have on 1031 exchange?
Well, I think, I grew up in Hong Kong, which is also very hot in real estate. And also I studied in Canada and now in US. So I kind of like compare a lot of time, the tax issues and social issues and real estate issues. I would say that the U.S. has the best. Well, a lot of people kind of like get the myth like tax is terrible in U.S. I always tell my client, okay, if you think U.S. tax being high, take a trip to Vancouver. You will love Uncle Sam and our U.S. investment and tax situation much better.
Well, thank you. I appreciate it. Thank you so much for joining us. Sure. And we'll have you again.
Oh, yeah, definitely.
A little more in depth.
Oh, yes. We can go into details.
That's all we have, guys. Take care.
Okay. Bye-bye.